TDK acquires Fabric 8 Labs for up to $400 million. Metal printing just hit the thermal bottleneck that limits how densely hyperscalers can pack GPUs without custom cooling. Fabric 8 Labs tech creates cooling pads no traditional supplier can match at volume. TDK now holds leverage in bids for next-generation racks. Competitors must either license the process or lose ground on power efficiency targets set for 2026 deployments. Standard Bots raises $200 million Series C at $1 billion valuation for ARMs built in New York shows reshoring has moved past prototypes into serious production capacity. Standard Bots can now double its output without relying on overseas foundries. That pressures European robot makers to accelerate their own US factory plans or cede share in the auto and electronics sectors they still dominate. Detroit RFPs will reveal the shift within the next 2 quarters. Wix plans 1,000 job cuts, 20% workforce reduction. Reducing headcount by a fifth suggests the website builder sees no rebound in SMB spending before next year. The remaining teams will have to ship faster updates or risk losing customers to free AI site generators that need no maintenance. Wix's cost cuts buy time, yet they also shrink the feature velocity that once kept agencies locked in. Agencies may migrate accounts if update cadence slips below quarterly releases. Intuit to lay off 3,000 workers in restructuring. 3,000 positions cut signals that tax and accounting workflows face margin compression from banks embedding similar tools directly in their apps. Intuit's remaining staff must now prioritize integrations over new standalone features. Office closures accelerate the shift to distributed development, which often slows release cycles when compliance rules tighten around filing deadlines. Expect fewer new form templates ahead of the next filing season. Versus.io closes $2.8 million Series A round. Early-stage capital still flowing into comparison platforms tells you structured data retains an edge over LLM summaries for high-consideration purchases. Versus.io can now expand its database to cover more categories. Retailers will have to decide whether to pay for verified listings or gamble that shoppers trust unverified model outputs when making big decisions. The test comes when the first major merchant pulls its catalog to test generative alternatives. Infineon invests $2 million in Kentucky Microchip Lab. 20 jobs over 10 years barely moves the needle for a company this size. The real test is whether the Lexington site can qualify advanced packaging processes that currently run only in Europe. Automotive Tier 1s are already asking for quotes with shorter lead times. If it succeeds, suppliers gain faster turnaround on custom modules. Fail, and Infineon will quietly consolidate the effort back to Villach within 18 months, leaving the state with an empty clean room. Texas Instruments nears chip production in Sherman. Production start in Sherman lets TI shift 65-nanometer runs away from its older Dallas lines. The move frees capacity for higher-margin analog parts that still rely on 200mm wafers. Competitors running similar nodes now face a capacity glut within 12 months. Customers locked into long-term supply agreements will start pushing for price concessions by early next year. Watch GlobalFoundries respond by extending depreciation schedules on its own 200mm assets rather than closing any lines outright. CargoX raises $250 million for logistics platform. The round size masks tighter terms Blue 5 demanded around route optimization data. Those clauses give the investor first right to license delivery patterns across the Gulf. Rivals without similar access will see their own models degrade on Middle East corridors within the next 18 months. Last-mile operators must now either partner early or accept higher error rates on regional forecasts. Amazon Logistics faces the same choice once CargoX data starts training third-party planners. Merck cuts 88 jobs at railway headquarters. Headcount trims at headquarters usually precede deeper pipeline reviews within 2 quarters. The 88 roles targeted sit mostly in commercial operations rather than discovery. That split suggests clinical programs stay funded while sales layers get flattened. Expect contract manufacturing partners to absorb more of the commercial workload by year-end as internal teams shrink further. Investors will read any delay in the next earnings call as confirmation that more reductions are coming. Fosio raises $4 million seed funding. $4 million buys little runway once cleanroom access fees at OSU are factored in. The round buys time to tape out the first photonic sensor prototype before larger VCs demand proof of 10x yield gains. If that milestone slips past Q2 2026, OSU will likely relicense the underlying IP to a better-funded spin-out rather than extend the lease. Competing sensor startups should monitor the tape-out date for any early licensing signals. Intel lands major chip deal with Alphabet. Alphabet's order book locks in capacity that Intel has not yet proven at high volume. This forces TSMC to accelerate its own US fab ramp or risk losing follow-on orders from other hyperscalers watching the allocation. Samsung's foundry team now faces a pricing decision on advanced packaging that could determine whether it captures any of the displaced mobile silicon work. Utilization forecasts for 2026 just shifted for everyone except the foundry that won the deal. BYD chairman targets world's top automaker spot. 5 years is an aggressive timeline when the current leader still ships twice the volume. BYD's real constraint is not production, but dealer networks outside China, where legacy brands can still steer fleet orders away. European regulators are watching the export surge. Any tariff response lands first on the 2026 volume targets. Toyota can adjust its hybrid lineup, but its Tier 1 suppliers will see order cuts by 2027. eRock completes IPO on June 10th. While bigger software companies sit on the sidelines, these smaller IPOs are clearing at discounts that reward only the funds already inside the cap table. Lockups expire in 6 months, and the real test comes when early investors decide whether to hold through the first earnings miss. Secondary sales at pricing already signal how much the original backers wanted liquidity over upside. Any sustained trading below the IPO price will accelerate that decision for the next cohort of issuers. PBLS Healthcare prices IPO. Healthcare issuers are seeing faster pricing than software names because reimbursement visibility beats growth multiples right now. The initial float is small enough that any post-IPO rally depends on whether hospital systems accelerate purchasing cycles in the second half. Insiders who sold at the IPO now have 6 months to watch utilization data before the next window opens. Follow-on risk rises if Medicare policy updates hit before lockup ends. Titan OS raises Series A funding. Device makers outside the big three ecosystems now have a credible alternative for their next refresh cycle. The round size suggests the investors are betting on licensing deals closing before the next hardware generation ships. Google and Amazon will need to decide whether to cut their own licensing fees or let Titan take the low-end reference designs. Component suppliers should already be modeling 2 OS paths in their 2027 roadmaps. Vinyl Equity closes Series A round. Jump Capital's involvement points to settlement infrastructure that existing secondary platforms still lack. The platform handles private equity transfers for founders needing quick exits. Early adopters already report closing transfers in hours rather than weeks. Most rounds focus on primary issuance volume. Here the edge sits in post-close liquidity mechanics. Salesforce loses its mid-market wedge by Q3 once cap table updates flow through this channel instead. The buried data clause lets the platform monetize trading patterns without touching the underlying shares. Zaro Media secures seed investment. Why lead a media seed now unless the targeting data already outperforms the major exchanges on viewability metrics? Cherry rarely backs unless the pilot numbers clear that bar already. The technology focuses on contextual signals that cookies never captured cleanly. Agencies test it first on premium video budgets. Publishers will see their direct sold inventory margins compress once agencies route through the new pipes. Legacy measurement vendors face immediate demands to integrate or lose certification status. Tech sector layoffs total 4,375 in recent week. The pattern shows sales teams shrinking faster than product groups for the first time since 2022. Support roles follow the same curve. Enterprise customers will encounter longer response cycles on renewal negotiations. Watch what happens to the API margin when this hits enterprise SLAs next quarter. Procurement teams gain leverage they haven't held since the last downturn. Vendors without self-serve options lose the most ground. TDK launches re-engineered catalog mobile app. Technicians already ignore the prior version on nearly a third of searches despite the catalog size. The update removes 2 extra taps to reach cross-reference data. Genuine parts must now match the mobile latency or lose the installer channel entirely. Hardware distributors without similar apps see their field share erode within 2 quarters. TDK timed the release ahead of peak parts season. New PA venture capital program launches $60 million fund. State programs like this clear just 40% of allocated capital in the first year. The new fund attaches hiring targets to every check. Local founders will route follow-on rounds through Pennsylvania vehicles to satisfy the clause. That crowds out pure-play national funds on later rounds. Regional VCs gain allocation rights they previously negotiated away. National firms respond by opening satellite offices inside the state.